Hello and welcome to my channel. In today's video, I'm going to show you how to build a 7-asset portfolio using Microsoft Excel. And we will walk through the entire process from downloading the stock data to calculating returns and optimizing the portfolio. So let's get started. So the first step is to collect the data and prepare the data. First, we need to gather the historical data for the stocks we want to analyze. I'm using investing.com, which is a widely available platform where you can easily download historical data for any stocks. So let's take the example of TCB, which is Techcombank, one of the largest bank in Vietnam. So go ahead and search for TCB, then click search for the TCB. Then click on the historical data tab. Now select the date range you want to analyze. Once done, click download to get the data in Excel format. The second part is to organize the data in your Excel. First, you open the Excel file that you have just downloaded. We need to organize the data by sorting it from the earliest date to the latest. So, yeah, that's how I did that. Focus on the date and the closing price columns. We will need to arrange them in ascending order to ensure that the data flows correctly from the oldest to newest. And once the data is organized, we can proceed to calculate daily returns of the stocks. So to calculate daily returns, we will need this formula. And this is a simple yet effective way to measure daily changes in the stock price. Simply type the formula into the first cell and then drag it down to apply the formula for the entire column. Repeat this process for all 7 stocks. Okay, now let's move on to the next part, which is calculate the annual return and standard deviation and also the variance. So I have put a detailed tutorial here so that you guys can follow. I also put the Excel formula in the description box of the YouTube video so that you can copy paste and using that in your portfolio management. Simply just using these formulas that I have put in here. The number of observation is 1049. To calculate the standard deviation, we use the formula square root, variance, daily returns multiplied by 255, and this will give us the annualized standard deviation for each stock. Make sure you double check your formula, double check your results to confirm everything looks correct. Next would be to calculate the variance index. Next would be calculating the Sharpe ratio. this is an important metric to evaluate risk-adjusted returns. To do this, subtract the risk-free rate from annual return and then divide by the standard deviation. For this example, let's assume risk-free rate of 3.2, as I mentioned before. And then you apply this formula to all 7 stocks to get the Sharpe ratios. Now we'll move on to calculate the covariance and correlation matrix using Excel's data analysis tool. So go to the we'll need to go to the Data tab and then click on Data Analysis and choose covariance. Select the range of daily returns for 7 stocks and make sure to include labels in the first row. And next we will do the same for the you can see that the results was here, and for the blank space we will use the formula transpose to fill in so that we could complete the table. And we will do the same for correlation matrix. The process is quite similar, but now we are measuring how the stocks move in relation to each other. So now that we have our covariance and correlation matrix, it's time to build our efficient frontier. Let's start by finding the portfolio with the maximum Sharpe ratio. So first, we will assign random weights to each stock. Don't worry too much about the specific numbers right now. Just make sure they sum to 1. Next, calculate the expected return by using the sum product function. I will put a detailed tutorial here so that you guys can follow. Just copy and paste and changing the weight array or the annual return array. And that's how we calculate the expected return. Now, for the portfolio standard deviation, we will calculate the square root of the product of the weights, covariance matrix, and weights again. That will be the most complicated formula that we have in this session. So after applying all of the formula, we will use solver to find the optimal portfolio that maximizes the Sharpe ratio. So let's see. Now you have to apply the Sharpe ratio formula, and then use the solver. Yeah, now we will use the solver function. Click to the data tab and then click on solver on your right hand. We'll have to set the objective to maximize the Sharpe ratio with these two constraints. Make sure that you have the same setting like I did on the screen. So next we will find the minimum variance portfolio by minimizing the portfolio standard deviation. Similar to before, assign random weights and calculate the expected return and the portfolio standard deviation. Again, we will use solver to minimize the standard deviation by adjusting the weights subject to the constraint that I'm doing right now. So now we're going to simulate 1,000 portfolios using random weights to create our efficient frontier. In this part, you would use the Excel run function to assign random weights to the stocks and then calculate the expected return and portfolio standard deviation. Next, we will plot the results on a scatter chart to visualize the efficient frontier. I have prepared these two tables so that we could draw the efficient frontier and also capital allocation line. Finally, we will add the capital allocation line to our chart by combining the risk-free asset with the risky portfolio. To do this, assign weights for the risk-free asset and the risky portfolio, then calculate the return and standard deviation for different combinations. You could use Excel run function to generate weights for the risky portfolio and then simulate the capital allocation line by combining risk-free assets and risky portfolios. Congratulations, you have successfully built a 7-asset portfolio, calculating key metrics like returns and risk, and visualized your results with the efficient frontier and capital allocation line. I hope this tutorial was helpful, and feel free to experiment with your own stock choices and different assumptions. If you found this video useful, please like, subscribe, and hit the notification bell for more finance tutorials. See you in the next video.